And in three, two, one. Hello, and welcome to another episode of the Guide to the Grind podcast, where we discuss money, mindset, and momentum. Joining me today, as always, is one of Canada's top mortgage brokers, Mr. Jonathan Tilger, the sprinkles to my ice cream sundae. How are you today, sir?
Not sure how I feel about being a sprinkle, but hey, I'll go with it. How about yourself? I'm doing awesome. Yourself?
I'm great, buddy. And I understand you're recovering from the Rona. How you
Yep.
feeling? You're good?
I am day four since I got it. I feel like I'm pretty much on the other side right now. The rest of my household is affected, but I'm out of the worst of it. I'm like probably 95% back at this point.
Well, that's good to hear, especially since I saw you last week and I didn't get sick. So thanks. And thank you for contributing to the herd immunity. Appreciate that. And
Hey,
today we
everyone's got to do their part. So
today we have with us a special guest, somebody I'm very delighted to have on the program. A lot of times when we have guests on here, we have printed out introductions, and it's very rare that I actually get to do one from the heart. So the fact that she is a huge heart person makes this even more emotional for me. So I'll try not to get choked up. Somebody I consider a very close friend, somebody we're going to be seeing a lot more of in the future. She is a professional. She is, she has been in insurance for a very long time. And I know that she knows that game inside and out. Melanie is also a branding expert with her Money Mama TO. I'm sorry, I'm not going to make the joke. Uh, I see it as Money Tomato every time I see it, but the branding is on point. All the colors, all
I,
the
I'm I'm
words.
I'm glad you're holding off on making the joke there. Good job.
I was just admitting it. I didn't. Money Mama TO. It's a fantastic brand. She's also obviously a mama. She's got two adorable children. And she's somebody that I have met through my business adventures, much like you, Jonathan, who's become super close to me and somebody I trust implicitly. That is the biggest thing I find in all of these games is knowing that you can, and we have defined trust as different, but this is on a level that I would let her into my home and leave her unattended, which I wouldn't do that with many people. So please welcome Miss Melanie Russo. Melanie, how are you today?
I'm great. Another sparkle on your ice cream?
Uh, well, no, you're the
You you you
sparkler on top.
you set the precedent. Now she's expecting what's her intro?
Come on, Jeff. Like,
Well,
which color am I?
you actually really, you're matching all of the background, which is amazing. I love this. You know how to accessorize. You got a whole couch to match you today.
Always, always. Everything needs to match. Ask my kids.
Oh yeah, don't look at the pictures behind me.
All right, so I'll take a step back here and help you out, Jeff. Here's the one you should go with for her, based on what you said so far. She's the tomato to your salad.
Oh,
We're gonna need to work on that, Jonathan. I think of the old trauma films, the Attack of the Killer Tomatoes, but that's a pretty niche thing. So I am happy to be back from Costa Rica. We did try and get an episode down there with my good friend Tim. Fortunately, timing didn't work out, and hangovers. Let's be honest. Just got to be honest. But I have brought back the best thing on the planet. I don't know if you guys know this Lizano
salsa.
sauce. It's Lizano sauce. It is indescribable how good this stuff is.
Mm.
It's I feel like I should be working for the company when I talk about this, but it's like sweet and savory. It's
Oh,
tangy, but not too tangy. It's a little bit spicy. It's a very indescribable sauce, and you can only get it in Costa Rica, at least to my knowledge. And I brought back the giant bottle of it. It goes on everything. Eggs. I'm sure you could put this on ice cream. Um,
hmm.
anyhow, I came back with that and a new tattoo, and
So
it's
I, I
finally
wasn't
healed.
I wasn't the Lozano sauce to your ice cream.
Moving on.
See, it backfired on you. Next intro, you better say something like about sprinkles.
Okay, so
Unicorn.
coming back to center. trying to focus, because we do actually have some serious stuff to talk about. It's terrible having fun when you're talking about businesses, and I hate that I get to work with people like you guys. It just makes
No.
my day so enjoyable that I can't stand it. Um, anyhow, what I'm understanding about your world, Melanie, is it's changed dramatically from when we first met. I always harken back to the, I believe it's John Prine song where he said all his friends have become insurance salesmen. And I never really understood that world. And I quite frankly found it extremely boring.
Yes.
Because nobody wants insurance, but everybody has insurance. Now, I've come into some situations in my life where it's come in to be able, well, it turned out to be very important and very beneficial. With a car accident, with my mom dying and her house, her mortgage being paid off, which I think we actually, you offer that product, don't you?
I do offer that product for sure.
Okay.
Yes, I do.
Definitely want to talk about that because I've had personal experience with it and I thought it was the most fantastic thing. Amazing.
And that's where it's not that boring when you see this policy
Yes.
coming alive
Yes.
for you.
Yeah. So let's stop right there because there's so much more that you do and there's so many strategies that involve it that it's kind of overwhelming. But let's talk about that. I personally have seen this come into action in my life. When my mom passed away, she had pre-underwritten mortgage insurance. Now, as a differentiator here, Jonathan, do you want to talk about like the difference between those mortgage insurances? Because
Yeah,
you kind
like
of falls on both of your fields here.
it's one of these things as you get, for anyone who has gone through the process of getting a mortgage, applying for the mortgage, you know that you're going to have insurance offers coming like just at you from everywhere. So I'm just going to go very high level on insurance. If you're buying a house, number one, if you're buying with less than 20% down, you're going to need the mortgage default insurance, most commonly known as a CMHC insurance. Number two, you're going to need homeowners insurance. This is, I mean, most commonly heard as fire insurance. Effectively, this is protecting the value of the house should the house be damaged. So if you're buying less than 20% down, the first one's mandatory. If you are buying a house, the second one's mandatory. That's flat out just mandatory. And you'd be, quite frankly, for the cost of it, it's typically less than $1,000 a year. You'd be stupid because it will replace the entire value of your house should it get damaged. So you're crazy not to have that. Now you get into the whole life side where there is, as you said, there is the mortgage life insurance versus life insurance. I'll talk about the mortgage life insurance and I'll hand the next part over to Mel because I know that's where you excel. So the mortgage life insurance, now there's different policies that are out there. With the company I'm currently with, it's through a company called MPP. They do some for certain conditions or for certain values, it's automatically pre-underwritten. So that's a good thing with it. When you get over higher values, they may do some additional medical follow-up before they approve the policy fully. Now, there are also additional policies that get offered through the various lender. So for instance, if I were to do a mortgage through one of the banks, I'm not going to single anyone out because they all operate very similar. If I do a mortgage through one of the banks, I'm going to have the MPP I need to offer. And then the lender is then going to send a follow-up typically to the client offering them this as well, it's follow-up. It's usually when they go to sign in the branch, it's going to be offered to them in there. So they've now been offered a couple times with essentially the same coverage that will pay out the value of the mortgage should something, God forbid, happen.
But there's a but, right, Jonathan? Like you have some sort of underwriting product, which is great, but as people may or may not know, life insurance is fully underwritten, right? So it has changed with COVID because they did increase the minimum non-medical amount. So most people now can get no medical requirement up to 2 million, depending on the insurance company, right? So which way higher than before. But having said that, you still have an extended medical questionnaire, right? As of before, the insurance company will ask for blood and urine, sometimes ECG, depending on the age. Now they don't ask the medical, so they don't have all the detail per se, but you still have to go through an extended questionnaire. The advantage, if we were to compare, right, the creditor insurance versus the life insurance is this is your policy. So once you renew your mortgage, you don't have to touch it. It's there for the duration of your mortgage if you choose to, or even longer if you choose to. There are different options of, you know, getting term or converting it to permanent, which is also an advantage. The premium don't change as you renew your mortgage. It stays level, right? So that's the beauty of going with life insurance versus the creditor insurance. It is, yeah.
Just one other thing that I don't believe you mentioned there, and that is that the payout amount, like if you get an $800,000 life insurance policy versus, or you get an $800,000 mortgage, as that mortgage is paid down to $400,000, you now would only pay out $400,000.
Correct.
Versus it would still pay the 800, so you can pay the mortgage off and have another 400,000. And I know in most cases that policy would probably be similar premium at the start, if not, depending on circumstances, maybe even be lower in some circumstances.
Yeah, most cases, what I've seen is actually lower, right? And so you have the choice, like I was going to mention, right? It's not you're not paying more every time you renew your mortgage for a decreasing benefit. You actually have what your mortgage amount is for cheaper for a longer period of time, first. Second, you get to choose the beneficiary. The bank is not the beneficiary. When you go with the creditor insurance and they pay themselves back, you don't have an option in deciding. And, you know, as we've seen in the past through COVID, the interest rate was so low that it might not be beneficial to pay your mortgage at the time, right? It might be more beneficial to use this money invested and, you know, pay it off whenever you choose to or not, whatever, right? So that's mainly the advantage of having your own life insurance policy, is that the flexibility, the conversion option. Sorry, the French. The French was coming out for a minute. I'm like, what's the term? Conversion options, the ability of, you know, converting. Like you have so much, and once you know that you've got approved, like it's fully underwritten, so you have peace of mind, right? Which is a beautiful thing.
Sorry, just one other question on there, and this is just we talk about, and if you can just clarify this point for me to make sure, see if I've understand it correct, or maybe I'm just off with my thinking. Just the other part about what you're saying about you can choose who the beneficiary is. My understanding with life insurance is when it comes to when someone passes away, things go into probate and all the rest. With life insurance, that is outside of that. Whereas if it's creditor insurance, it will pay off the mortgage, but the house is now tied up in potentially probate. So it could be tied up for months before that can actually be accessed, versus life insurance where I know typically for those, once the insurance company get confirmation the person has passed away, they are usually pretty fast to resolve those.
Yeah, no, exactly. You're right. With life insurance, it's not taxable, first of all. It bypass probate fees, right? So this is the advantage. And yes, you can get a check sometimes as fast as 3 business days. Like if it's a, you know, legit death. If there is no like creative, like, whoa, what happened here, right? It can be very fast, depending on how long the policy, of course. If the policy is new, within the first 2 years, there's always investigation. It's not like they're not going to pay, but there is a clause in the contract of life insurance within the first 2 years, something happened, they will investigate, because obviously it's very early on, right? So they want to make sure that there was not a pre-existing condition not disclosed. And that's it. But that, again, the beauty of life insurance is every time we go to the doctor, it's recorded on our MIB, Medical Information Bureau. So if we do forget some like important information, like for instance, I had a mammogram, right? It's an important information, but I forgot to disclose that when I applied because everything came back normal, right? But I do have breast cancer that I disclosed in my family, right? So I disclosed that, and because I had a mammogram, the insurance company, I think people think that they don't want to pay out, but they actually do, because then they came back and give me a chance to explain. It's like, oh yeah, I had this mammogram, I forgot, right? And just they give me the opportunity to disclose what detail needed to be disclosed, and then they wanted more, and they went to my doctor to get the results just to make sure, right? So that's a really big advantage to have life insurance, because it also, for estate planning purposes, right? That's why wealthy people also buy life insurance. They don't need life insurance. They're self-insured when you think about it. But, on the second spouse death, there's going to be capital gain, right? So a beautiful part is, why not pay 50 cents to get a dollar? That's how life insurance works. You're actually paying less to get a bigger benefit. Yeah, you might not use it because it's for your beneficiary, but there's policies that also builds wealth within them that you can use while you're alive. So that's why, yes, life insurance might be boring, but for me, I get very excited about it because there is so much stuff that you can do with it. It is an investment when you choose to create it, right? So did it answer that question?
I got nothing to say.
That's my French, and you start with a subject and I just go on and on. I get excited.
Did I not tell you it would just be fine before we came on? We didn't have to worry about what we're going to say. So there's a lot to unpack there. And I would like to make a key distinction for myself personally. When I was first learning the insurance game, or at least how it related to mortgages, excuse me, I always understood that mortgage insurance was the CMHC, the Canada Guarantee, the Genworth. That's the way it was perceived by me at the time, that was the mortgage insurance, but that's the mortgage creditor insurance, as Jonathan pointed out. So that pays that's basically, if you screw up and miss a couple payments, the lender still gets paid. Is that my understanding?
Yes.
Yeah. Is that correct? Yeah.
Yeah, because it's for your high ratio, less than 20% down, is to protect the lender, to give them the safety net that should the person default and the property lose value, they're not losing money.
And do mortgage agents and brokers still have to offer that with the mortgage after 20%?
After if they got 20% down, no, that is not required. There are some circumstances where it may be required or may be requested. I mean, I could touch on some of those if you want to get into that right now, but it's not.
Let's walk down that path together,
Sure.
Jonathan.
So the times were less than 20% down, it may be required. If it's stated income product, so meaning someone is self-employed, newer self-employed, they're not necessarily showing enough income, but they've got the revenues, just reported income's not enough. So that's where you do a stated income deal. And in those situations, they've got 20% down or a little bit more than 20% down, they may still need to pay an insurance premium. I have also seen a few cases where somebody is newer to Canada, maybe doesn't have necessarily the established credit, or someone who has gone through basically they've had some past credit issues. And so the lender is essentially saying, hey, we will lend to you as long as the insurer will back it up, and we're requiring you to pay the insurance premium. But at the end of the day, here's what it comes down to. You could actually request any mortgage you want getting insured and pay the insurance premium if you truly want to do it.
Something new.
You know what? I love it that you're here and learning something new. That means this show might actually be of value to somebody at some point, somewhere, somehow. So let's move on to the other type of insurance, which is the type that has a beneficiary named who actually gets paid out by the insurance company in the event of death. I'll relate this to my own personal experience because this is where I started to learn the distinction when dealing with the business of dying. When my mom passed away, she actually, it was one of those rare cases. It was within their first 2 years. In fact, it was like 4 months later or 3 months later that she passed away from cancer. but they had fully pre-underwritten. She'd gone through a whole bunch of medicals, blood, urine, all that stuff. And there was actually no delay whatsoever. I think we had the check within a few days, like surprisingly so. Of course, we didn't understand at the time about maybe we just might go invest this because whatever. We don't look back in anger. Man, I
No
wish I knew then what I know
self-judgment
now.
over here. No self-judgment.
That I actually learned today. I never really thought about that until today. And I'm like, dang, we really could have done much better with that money than just paying off the house. Anyhow.
Beautiful learning experience.
Yes. And oh gosh, I just spilled my tea all over my desk. I know that in that time of craziness, I'll call it, knowing that the mortgage was paid off was just such a massive relief. Like, this is where the rubber meets the road for me, because you can talk about premiums and policies and features and bells and whistles on something all day long, but until you actually see the actual real world application of it, we buy on emotion and we justify on logic. Unfortunately, the emotion comes after with insurance because that's when everything's done. But I know that, like, you know, my mom's dead, just went through the funeral process. I've got all sorts of, you know, this bill's out here and that, but we got the check for the mortgage and we're like, okay, we can pay off the mortgage, that's done, and we can pay out all these other things and deal with all that. But the mortgage is taken care of. My stepdad had a place to live. We didn't have to worry about all that stuff. It was a massive relief. That's the only thing I can say. It was just something, one less thing you didn't have to think about. And it's a big thing because my mom took care of all the bills. My stepdad didn't know where things were. I didn't know where things were. So that I highly recommend anybody who's, you know, looking to leave legacy. That's a big one for kids or spouses to be handed that check at any point in time, just saying, here you go. This is, you know, I remember my mom when she got it, and I wasn't really paying attention at the time because who knew, but I remember her saying, you know, I'm going through this process with them and I've got one more thing to do and I ain't leaving you much, but at least you guys will have the house. And it was, yeah, it's hard to explain the emotional impact that had on me long term. Anyhow,
you're gonna get me emotional, Jeff.
no, it's true. It was,
it's true. It's a beautiful thing.
Yeah, there was a lot of other stuff to deal with, and that was just one of those things. It's like, okay, this is a gift from mom. It really was. It was like, holy crap, thanks, mom.
Yeah.
Anyhow, you talked about other strategies within the insurance game. One of the ones that I think it's becoming more common now, but was one of the ones that blew my mind is just the ability to put money into an insurance policy and then borrow it against it to go invest, and it becomes a write-off. Do you want to explain a little bit about that?
Yeah, I'm not going to go into too much detail for like compliance, but yes, you can use an insurance policy because the money grows tax-free in there, right? Maximize on that. And if God forbid something happens in between, then again, you've got the life insurance policy that will pay out to your beneficiary, right? So leveraging money from a life insurance policy to buy investment or property becomes, the interest rate becomes tax deductible because you used, again, it's all about leveraging, right? Just like buying a house, you're leveraging the mortgage to buy the house, to build equity, and you pay it off over time, right? But when you have this life policy and you leverage that off, you know, it's a win-win-win because it leaves the death benefit for your beneficiary. You're using the money that's growing in a tax-free environment. Once you use and leverage that off to buy an investment, you get the tax deduction for years, and then you're building another equity on the side, whichever you decide. So it's a win-win-win, because if you were to only use your after-tax dollar to buy this investment, you wouldn't get any deduction. So in life, as we know, a big retirement goal killer for all of us is taxes. Sorry for the government here, but it's taxes. And the way to minimize it is to use the strategy. A lot of wealthy people use this strategy because then they get the tax deduction. Reduce their income.
Can you do that through like an RRSP?
Through an RRSP? Using them, yeah, you can. Yeah, there's
registered funds. Yeah,
you can do that. Yes, it's a little bit more complicated to explain verbally, but yes, you can certainly do that.
No, it's interesting to me because and I mean, we've talked about this before. The whole reason that I got into this business is because of what happened with my mom's finances when she passed away. And what I saw was her whole structure versus, you know, it's extremely hard to get really good financial advice when somebody's paycheck is tied to it.
Of course.
And most people, and I don't think it's any kind of malicious intent, but a lot of times people are only looking at their area of expertise and they don't see what's going on over here in somebody's structure. And, you know, for my mom, it was having $10,000 in mutual funds, making 6%, and 40 grand in credit card debt costing her 20%. So the way the math worked out, it was costing her like $1,200 a year to have her investments. That's why I love working with you, because as a mortgage working with both you guys, as Jonathan, as a mortgage broker, you have way more access to most people's financial records than most people, other than maybe an accountant. Like, you have to see everything because that's what the banks need. And then, you know, knowing people like you, Mel, I love just sitting around and having conversations. We all met for lunch the other day, and just the stuff that can get born out of understanding each other's sides and understanding that, you know, maybe I you know, just off the top of my head, I'm thinking that strategy is best implemented when somebody's already maxed out their TFSA and are ready to invest, and they can continue to grow in a tax-free environment outside of their TFSA. And I would never, ever recommend an RSP to anybody. And I don't care whose toes I step on, because I don't have a license for that.
I want to jump in here and comment on that stuff there, because I know a little bit about it. And this is, I mean, tying back to what you were saying, Jeff, about someone whose advice is being tied to their paycheck, and it being truly the right product for them. Because that type of strategy, and Mel, and I know enough about this that I know that is not the strategy for everybody.
No.
And I've seen so many times, and I just know that as far as the compensation for the insurance agent, it's like here and here is the difference between what you get paid for a standard term versus one of those policies. Or sorry, here's the standard term, here's one of those policies. There's huge compensation. So as a result, I know that there's a lot of people who have been, they're not in the financial shape for that type of strategy. They need insurance, they're being put into that, and now it becomes a financial burden to them.
Yeah, that's where we need to be very mindful. Good point, Jonathan, for sure. Like, I always say to people I meet, there is a place for term, for sure. And when I meet, especially a lot of my market is like young family, and I tell them, I always present both, right? So they know. But when I deal with a young family, typically they have daycare costs, like their cost output is a lot, right? And that's where having that roadmap, being a mortgage agent, you see exactly like what's their debt ratio, which is a beautiful thing. So then you can really guide them to say, you know what, we're going to place you in term right now, because you're going to hate me in a couple of years when your kids start going to daycare, because like you said, Jonathan, it's going to become a really big burden. And that's going to be stressful, paying $250 per month for your life insurance, right? And because you need it, you're your own family, right? Yet I prompt them to say, you know what? Between now and maybe 5 years, we're going to have, because we're going to meet on a yearly basis anyway, right? We're going to strategize and we can convert. That's the beautiful part of having term. You get term and then you convert. There's no medical requirements. Very easy. It's just a conversion. And then we create that investment part when the time is right. right? I do believe that everybody should have permanent life insurance, because not only you can leverage it down the road, you can give that as an assignment to a bank, collateral to a bank, and leverage that off for retirement enhancement, whatever. Banks love those because it's a guaranteed payout. But also, when you have a young family, most families that I meet, first of all, you'll have your funeral costs to pay for. So why not pay 50% on your funeral costs? Because if you pay your funeral 40 years down the road, what is the inflation for I have families who owns like funeral homes. I know it's a great business. It's a really good business. It's not decreasing, right? We're going to be dying in 40 years. Like a cremation today is 10,000. Think about it 40 years down the road. It's not going to be 10,000. It might be like 30,000. Right? So where's this money coming from? Do you want to pay 30,000 off of your pocket, or you want to pay 15,000 to get that life insurance and get that 30,000? Paying out, the output is half the price, depending on your age again. Right? There's a lot of moving part in life insurance, but that's what I'm saying is like everybody should know that in life, if you want to get ahead, this is all about leveraging. How do you leverage? You know, you need your life insurance anyway. So down the road, why not make it an investment for you, right? Just like you're putting TFSA aside, you're putting, some people are RRSPs, right? Take some of that money and diversify with your life insurance policy, right?
What do RRSPs?
No, I know.
What?
I know. I'm not a fan either. I'm not a fan, but I just, people do their thing. But like this is the power is people don't realize. And if I were to show people buying term and then ending up eventually have no coverage, or buying whole life or universal life permanent policies after 20 years, if they were to cancel, let's say you buy a term 20 and you buy like a whole life 20 pay, right? You're going to be paying for 20 years. Yes, the whole life will be much more expensive. But if they can, assuming that they can afford, right, the whole life, if I were to look at the cash value that's building after 20 years, if your intent is to cancel it, actually your whole life will cost you way less than a term 20, because you get some money back after 20 years. If you cancel your plan, you'll have a check, right? I don't know why you would do that. But having said that, that's why I believe that everybody should have permanent life insurance. Once they know and they learn how powerful this investment is, it's very powerful.
And that's it. It's not just to cover you when you die. It's an investment.
Correct. Like, whose car insurance is going to give you some money back because you're a great driver? Nobody's going to give you some money back.
I once got a bonus because I was nice.
Really?
And it was like a 900. So I had a car accident. I was dealing with the person that you deal with directly after the car accident. We won't talk about we can talk about some of that stuff. But I know that what I was dealing with is just like, and I'm going to give you the $900 bonus because you're just really awesome. It's like, oh, cool. It's some sort of nice customer, great customer bonus. I was like, that's awesome. $900 for being a decent human being.
That is amazing. But don't think about that. But we pay like sometimes $400 for car insurance, and we're not even wanting to spend $15 on our own life.
Because we have to have the car insurance.
I know. But like once we have, like, again, I'm biased maybe, but no, it's a powerful investment once we look at it on that side.
Yeah, I got to talk to you about all that because I need some of that. Something even more fascinating that you do. I've heard you talk about this. I've brought you in to speak on this before. Your RESP alternative. Do you want to talk about that a little bit?
Yeah, the Head Start plan. I call it the Head Start plan.
Yes, so the Head Start plan, but it's kind of mind-blowing for me. So please do your thing now.
That's it. Well, again, if you were to maximize on the grant, there's nothing wrong with RESP. Okay, first of all, I'm not bashing the RESP at all, right? But for me as a mother, particularly, I want beyond education. So the Head Start plan addresses this. It's not a concern, but for lack of a better word, like it addresses it. I'm just going to call it it. Don't know the word. But if you are going to maximize on the grant for the RESP, you would have to contribute 36,000. But the government allows you to put up to 50,000. Okay. Plus, of course, it grows over time, right? It fluctuates though, right? It's an investment. So that's great. But my brain always goes into, okay, let's maximize everything. So why would you want to put more than $36,000 in an RESP if you're only getting 7,200 grant money from the government? Why not leverage that additional 14,000 elsewhere? Right? I'm a big real estate investor believer. So when I meet parents who are able to buy real estate, of course, go that route. It's amazing. Like, especially if the kids are young, that mortgage will be paid when they're in university, most likely, and then you can leverage that off to pay their school and etc. And, you know, make more income, cash flow. So it's always a great investment.
I'm not aligned at all on that, by the way. Not even a little bit. Just kidding.
Yet the government doesn't allow kids to have a TFSA. Again, as I mentioned before, the big killer of any plan is taxes, right? So if you open a non-registered account for your kids and it grows, then you're going to have some taxes to pay out of that for the growth, right? So not really cool. So if you have room on your TFSA, you can do that, right? You can use a little portion and then transfer it out to your kids. But then what was next? That was my thought. What is there beyond RESP to help our kids buy real estate, especially because a lot of parents come to me and it's challenging for them to buy real estate. And so they want to set their kids up for success. So what else is there? Well, permanent life insurance is a way to start building wealth for their children. And again, it grows tax-free. They got the foundation of any financial plan. They got life insurance for life. So if their health changes, they have it. The beautiful part is that the parent has control over the plan. So that is their money until they choose to transfer it over. Right? So the child is not behaving so well, then that's your money. Right? You can keep it. And then the child can leverage that to open a business. When I had my first business loan, I had to give something as collateral. And I had my life insurance policy because I didn't have my condo anymore. But I used my life insurance policy as collateral. So it got me my loan. But the process of getting a business loan is exciting, right? So with this policy, you don't have credit check. You don't need it. It's a phone call. It's a quick form to sign, and you get the money in your bank account. There's no question asked. What are you going to use the money for? No. And again, when you teach your kids to leverage, or you call money mama and I'll teach them to use this money to buy an investment, build their wealth, or if they cannot invest in real estate, that's okay. We can use this to buy I don't know if I pronounced that properly, but REIT, like a real estate fund, right? So they can build more wealth with it. And then they reduce their income, paying less taxes. So it's a ripple effect. They're getting a compounding interest here. They're getting a deduction here. So they're saving on the taxes. And when they're saving on the taxes, they can use this refund to do it again and again. Right? So it compounds, and compounding interest, as we know, effect is the most incredible thing. Right? They have the best gift, and this is the gift of time. Like I showed my son how to be a millionaire just by saving $100 a month. Just for 10 years. Just for 10 years. And just let it ride. That's it. That's all he needs to do.
I also find it fascinating that, for somebody who wasn't a big fan of education, at least not in the traditional sense, I when that kid gets to college level, what if they decide not to? If you go with the RESP, the benefit drops off to whatever,
You
7,500 bucks.
can leave, yeah, you can leave it open until age 36. But yeah, if they don't use it, then it is taxable to the parents' hands.
Mhm.
And yes, they can put it in an RRSP to not get tax on it, but then you lock the money out that you've saved for 17 years.
Mhm.
Right? So there's better effective way to use. That's why like maximize on the grant if you really truly feel that your kid is going to college. That's great. But then that 14,000 gap that you're not getting grant on, use it for something else. It's
Mhm.
all about diversification, I believe, like don't put all your eggs in the same basket. And that's what I learned when I went through my second transition. I was just putting my money in real estate. That's all I had. I just hold real estate. It was great. You know what? It's great because I fall back on it, right? When I separated the second time. But it made me also think if I had diversified, I would not have lost so
Mhm.
much, right? And I don't like to use loss really. It was more like this happened, right? I made a decision and this happened. But again, diversification is key because then you get the best of both worlds. You've
Mhm.
got that here and over here. And so if one side fall, then you've got this over here, right? So it really is creating and deciding what's most important for your family, for your kids. What do you want to create? That's it.
There's so much more to understanding how to invest for yourself than you could ever unpack in one episode.
It's
And
too much. Yes, it would be. Yeah, it will take a few days, I think.
well, I love that you've brought in this whole insurance side to it because, Jonathan, a lot of what we talk about is real estate investing and how important that is. But bringing in the insurances side where there's, I didn't even understand how many different types of insurance. And when you say diversify, if you consider, insurance to be an asset class, you can diversify within that asset class even. Um,
Yeah, he
with
agrees. Your cat agrees.
Yeah, I know. She only seems to wake up when I'm recording. Um,
But it ties in
Well,
together, if I may add. It ties in together. When you hold real estate, eventually there's going to be capital gain to pay on that.
mhm.
And that's where the life insurance is that safety net that's going to pay for it for
well,
half the price.
and
Hmm?
the other thing, and this is one of the things that I remember hearing years ago. And when I initially heard it, I thought, yeah, whatever. And as I learned more, oh yeah, that does make sense. And talking about insurance, but part of insurance, especially during the early years, before you look at it as an investment,
Mm-hmm.
but in every financial plan, the insurance is kind of, well, it's your insurance in that plan. It's essentially saying, well, if we're doing everything as per this is where we'll get to. Well, what happens if something changes? So you've got a couple, they've got a couple kids. Hey, what happens if something happens to one of us? Then
Mm-hmm.
what happens to that plan? And so that's really where the insurance comes in as a crucial part of that plan, saying it covers that what if, so the family can still go on, the kids can still have the education that you had
Correct.
planned for them. You can still help them out buy their first house, all those things.
Exactly. You got it. That's exactly that. That's exact. Yeah. That's the what if
You know,
policy.
this answers a question for me too. I've known a few friends and close people with kids with disabilities. And when they're gone, those kids, have things that need to be tended to. And I really think this would be the only way to make sure that happens.
There's a few ways, but yes, of course, that's one of them for sure. There's
Yeah.
a few ways. Yeah.
I don't know. It's one of those things that I've thought about in the past, and I think insurance is a great way to do that. And on my, for my experiences, I would definitely say mortgage insurance, huge. Mortgage life insurance, sorry, huge. That massive benefit. Car insurance, we all have to have, but carry more than $1 million because that's scary. Um, People don't understand that $1 million is not enough coverage anymore. I know I was sued for a lot more than that. And thankfully insurance did cover everything, but you know, they can come after your house, your everything, if they win the case and they are over that limit. So I would say 2 to 5 million minimum nowadays on car insurance, which is crazy. Mel, anything you want to say to wrap it up?
You know, you're putting me on the spot.
Yeah, I am.
He does that.
Just I think I would love to tell people, just become curious. It might be for you, it might not be for you, but ask the questions. Look at your situation where you are, especially with a mortgage agent, because mortgage agent has the ability to see the whole picture.
Mm-hmm.
And we're not only mortgage agents at the end of the day. We're really there to help you with the overall.
Oh yeah, I didn't even mention
financial
you have a mortgage license too.
Yes.
You do insurance
So,
and mortgages and a mom. What don't you do?
yeah,
How about cooking?
I don't cook. I was going to say I don't cook. I don't cook. I don't clean. What's the song? I don't cook. I don't clean. Blah, blah, blah. I don't know. But that's why I'm still single, you know. Yeah, so just become curious and just really determine like what you want to create and have that chat. Have that, even if it's uncomfortable, because again, like I love that you share your story, Jeff, about your mom. Because yes, when my grandmother also left me a small amount, this small amount was very, very meaningful.
Mm-hmm.
Very meaningful. And your legacy is passed on, you know, like
Mm-hmm.
so.
Well, quite honestly, there's a pretty straight line between that moment and meeting both of you guys. So, like, actually, like, very straight line, which is kind of crazy now that I think about it. But we can never see those things looking forward, only back. Jonathan, anything you want to say to wrap it up?
Oh, well, Melanie, awesome having you on here. I mean, obviously we've known each other for a lot of years, so
Yeah,
fun
thank you
having you
guys.
on here. It's your second time being our guest on here. Yeah.
More to come with the
And
pirate
Jeff,
dress.
always a pleasure. And everyone listening, thanks a lot. Thanks for tuning in.
Thank you guys. I'm very grateful. This is fun.
Jonathan, Melanie, thank you so much for your time and your expertise and your beautiful souls being a part of this. I love you guys. I'm so happy to be on here with you today. And thank you for listening. We certainly appreciate your time. We hope we provided a ton of value. If you want to know more about Melanie, where can they find you?
I'm a secret agent. I'm kidding. On Instagram, Money Mama TO, not tomato. I'm on Facebook as well. I'm on LinkedIn under Melanie Russo. My email is melanie@moneymamato.com. And yeah, just connect with me. I just love having that conversation. I think you guys can confirm that I am so not pressuring. I just genuinely love having that conversation that can guide you through your next step, that you decide to deal with me or not. At the end of the day, I think all the three of us, our main goal is to support you and, you know, see you rise up.
Fantastic. So thanks, Melanie. You can find her again at moneymamato.com and all sorts of other branding under Money Mama TO. If you want to know more about what we're doing and some of the courses that we run, you can certainly go to guidetothegrind.com. Find us there. Check out what we got going on. Shoot us an email and we'll get you in on one of our next info sessions. Thank you so much, guys, for your time. Thank you for listening. Have a fantastic day, and we'll talk to you soon.
You.